I'm an emotional person. So even my authentic self is emotional. Like even founders see all sides of me. For me, it was day 4, day 5. I wanted to leave. I was just done with, it's quite a tough experience. It sounds easy when you think, but it's extremely difficult. Like you're left with your thoughts, and then it's sort of a reel of thoughts that just keep coming to you. You can't control your mind, but then the mind just gives up by day 5, and you find silence and peace. And it was really transformed, because it's like the way, just on a surface level, it's like detoxing your mind essentially.
Amir, it's طبعا always an amazing pleasure to see you and spend time with you. Thank you so much for making time for me today.
I'm really excited to be here, Rabea.
Yes, Lemo. I guess, you've been a long-term entrepreneur, but you've also been a pioneer of the venture capital space industry in the region. I guess you've been here doing venture capital for as long as venture capital has existed. So really what I'd like to explore today with you is a few different things. I'd like to explore what that space looks like right now. So what do people have to look forward to in terms of the access to capital? How easy is that to come by, and where to get it from? And then I'd love to speak a lot about what you're seeing within the entrepreneurship space, what makes sense and what doesn't make sense. And obviously your personal journey has also been a highly inspirational one that I'd love to get some time to get through. So maybe I'll start with 25 years ago when I was starting Bayt, there literally wasn't any venture capital out there. I remember we traveled the entire region looking to find institutional investors. And in the end, we found that one sole investor that existed in Jordan. And probably their fund size was south of $10 million at that stage. Maybe you can tell me a bit about where the industry is today. Obviously, things have changed, and I'd love to hear about that evolution.
Yeah. Well, first, thank you for all the kind words and encouragement and everything. It doesn't feel that long, even though it's been a stretch. Look, it's interesting because I think you guys were you and a handful of others, but you were the pioneers of like the startup world, right? So I know Tiger was early in your company, and Tiger obviously is a major global investor. I also know you didn't raise much to get to where you were because, it wasn't easy to get capital. So that, that comes with some, at least, I would say benefits if you do raise capital in those markets. But I mean, it's changed a lot. I think I also, when I first started out my career, not to go on tangent, and if I do go on tangent,
please do go on tangent. I like the tangents.
So I didn't really know much about venture. I just stumbled into the industry after doing computer science in the UK and then working as an software engineer. When I landed in venture, I just fell in love with the space. And I had come back to the region in 2008, wanting to do it, or at least wanting to explore what's happening in that space. And there was nothing really. Dubai International Capital at the time had launched a sort of a CSR initiative, which was the Arab
This was what year? In the early 2000s?
2008.
2000.
It was called the Arab Business Angel Network. They were trying to create a seed fund that was married to an angel network to catalyze the ecosystem. It was me, Walid Hanna, even Khalid Talhouni at the time was there. And we were like...
all of whom have gone on to build their own businesses.
Exactly.
VCs.
Exactly. They launched their respective VCs. But I mean, at the time, there was nothing, and we were trying to catalyze something. Obviously, the global financial crisis hit, but there was a moment that we crossed paths, if you remember, when you had launched Intilaq.
Yeah.
I won't forget it because I was like reading it. I read it, obviously, like through the press. And obviously, Danny, obviously, as my cousin, I was like, guys, you're starting this. I've been doing venture for a while, And then we connected. I mean, we explored the idea for a bit. I obviously, like, the GFC happened and things didn't necessarily move further down. But you did invest in Go Nabit, and a few other things came out of that, which was really exciting. I mean, those are just like the nucleus of things. I mean, then, me and Danny got together in 2012, wrote a business plan and said, let's look at what's happening in the ecosystem. We kind of cast a wide net, and then we figured out that technology is actually having a moment. And then that led us to kind of do deal by deal investing and then create the first fund. And I say to people, like, back then there was maybe $20 million in all of venture. So it was zero for the longest time, like pretty much zero. I mean, apart from you, Maktoub, and a handful of others, up until 2000, maybe 12. And then 20 million, and then now today we've compounded to about over 3 billion, right? And it's massively changed.
And 3 billion over how many VCs would you say?
I mean, there's now a broad. I mean, The number I'm going to call it maybe 50 or so, 50
Okay.
plus, I would say realistically. You include accelerators, maybe that's a bit more because there's a few accelerators that have launched local and regional. Yeah, but I would say, probably like of those, let's say realistically around 10, I would say are the most active in terms of scale and the deal activity. But it's changed a lot, and I think strategies have become more focused. I mean, when we started out, we were doing everything from seed to Series B, at least in the Becco days for the first, let's say, 9 years. And then now we have very much, like we became, Cotu at least became a very focused pre-seed fund. You have Series A funds, you have growth funds. Now you have the whole stack kind of appearing, which is exciting for the ecosystem. But still, there's still a lot more to do. I mean, founders don't have that much optionality. International VCs are now interested, so there is more activity there, which is exciting. I mean, there's a lot of forces that are at play that are, I think, really positive. Obviously, governments are now putting it at the top of the agenda. The whole AI shift is really like catalyzing the founder ecosystem and even more. And I think, it's still a struggle, as I'll speak on my, like at least in my own experience, to continue to raise funds in this ecosystem. It's just, LPs are getting more sophisticated, but it's not as fast as the need of capital. So you still have this sort of pulling that you have to do to kind of create the funds you need to invest in the ecosystem. Right?
When I founded Bayt.com, I was driven by a simple belief. Everyone deserves a career they're proud of. Over the last 25 years, we've helped millions of professionals across the region find opportunities, grow their careers, and change their lives. And one thing I've learned along the way is that small advantages can make a huge difference in a competitive job market. That's why we built Bayt.com Premium, to help serious job seekers stand out, strengthen their job search, and improve their chances of getting noticed by employers. As a BaytCast viewer, you can get 20% off your first month of Premium when you click the link in the description. And when you look back, what do you think has incentivized that rapid growth in capital in this? Is it that there have been that many more startups, or have there been a lot more exits? I have a lot of questions in my head, and it'll be interesting to hear from you. We always hear about one or two great success stories of exits in the region that are at least public. But I'm not sure how the asset class as a whole is doing. So as more money is being pumped into it, is it able to produce returns?
I mean, this is a game of outliers. So the ones you're talking about are the outliers. And I think we have a lot of outliers, or that at least the cohort of outlier companies is growing every year, like multiplying every year, but still from a small base, right? You started like there was 2, 3. I mean, there was you, then you had Maktoub back then, but then I have Property Finder to Bizzle. You have Tabi, Tamara, Hela, Sella. There's now, it just keeps compounding, I mean, from a small base. So if you extrapolate 10 years from now, you'll have a healthy, 100 plus like really good outliers. And if you're a fund manager, you want to capture a sliver of those to really generate returns. So, I think the asset class has its challenges. If you are a top performing fund, you will generate really good returns and you will capture a handful of these. It's about, so that was a bit of a tangent, but the answer to your question is everything. Like, it's like, maturing founder ecosystem. People are, knowing, like have gone through scaling a company and then as operators and now have gone to start their first companies. That sort of flywheel is happening. Obviously, Kareem was a big catalyst of that. Actually, Kareem was, I would say, one of the biggest proponents of it. 200 so companies came from Kareem graduates and so forth. And then government spend, of course, like they've catalyzed the ecosystem, funding managers, and that trickles down to the founders.
And it seems though every government in the region is focused on generating unicorns.
There is an agenda
within their geography. That term has become widely used as a priority.
Yeah, it's interesting because I was listening to a podcast with Jad Antoun, the founder of Husfi, one of the companies we backed. What I appreciate about some founders is they break these milestones. Like they break the threshold. So before it used to be unicorn. Now sort of Jad is he's going after $1 billion revenue. So no longer $1 billion company. Now he wants to go after $1 billion revenue. And so you have Tabi that crossed $1 billion revenue, right? So the outliers are thinking, always stretching that goal. And I think that's what's really exciting to see with a handful of these founders that are trying to have that ambition. Because when they do cross it, then the next founder will see that as a new target, and that kind of creates that flywheel again. I think when we were starting again, I'll go back to 2012 because it's sort of just maybe a good point of reflection. But like we were like looking at companies that could generate 20 million in revenue.
Yeah.
It's the world's changed so much since. But yeah, just to and then obviously governments are using unicorn as a threshold. But I feel like at least for us, we're like that $1 billion revenue. It's not going to happen across the whole. I mean, I hope it does, but it's unlikely to happen across our most of our portfolio. But if we get a few of those companies that achieve that kind of milestone, it can be really impactful for returns, but also generally as an ecosystem builder.
So I'm going to come back to that in a bit. I want to go back a bit to the sort of the starting question, which is the asset class actually returning money? So I know it's a game of outliers, and there are companies that are outliers, and they tend to be, again, a handful that's growing.
Yeah.
Currently, are the institutional investors in them also producing returns for their investors? So because you can have one outlier in your portfolio, but the rest of your portfolio can
100%.
be performing less well, and as a result, your investors actually do not come out with great funds.
100%.
So people are returning money, or is it too early in the stage? Is it right now everyone's trying to get their funds
great question.
funded?
I mean, I would say yes. The short answer is yes. But if you take like the early funds, so MEVPs, I think they had a 2010 fund that returned maybe 2x to LPs. Fund 1 for Beko, which I think is public information, is now the DPI is around 2.5x, and they still have a couple of companies in there. So that's actual capital return.
Yeah.
I think Global has done some DPI. I don't know what their metrics are. So the early funds are starting to show returns. But, it is a long asset class. Most funds, they say 10 years, but really it's maybe 12, 13, 14 years to really exit the whole portfolio. So I think we're entering that stage with a lot of funds.
So we'll know soon.
We'll know soon, but also like, I think we have to bear in mind that the top 25% is going to really what is going to generate the returns.
Right. The top 25% of the VCs.
Funds, yeah. The rest will just naturally struggle because of they have to catch those outliers to really make it happen.
And given that dynamic, to what extent is the industry, and given how many new firms have popped up, how collaborative versus competitive is it? So it seems when I look at cap tables of large companies in the US, startups, the unicorns, they tend to have a whole bunch of investor brand names that you see repeatedly in all of them. They seem to be highly collaborative, at least from the outside in. Is that the case in the region, or is it that?
It's funny, I feel like the US, yeah, you're right. It is collaborative, but it's also competitive. General Catalyst and Reason Harvest, there was recently some, the interesting tension between the two companies, and they're both big platform funds. I think the region is still figuring that out. I don't think they're, I think some funds have not been able to raise their next funds, and so consequently have like wound down. And the ones that have continued to raise funds, I feel like there are some, let's say, basic collaboration, like they do share deal flow, but I don't think there's like alliances like in the US where if you get money from this fund, that should help you get money from the next fund and stuff like that. That's still a ways to go. And I honestly am going to, for us, our strategy is actually a bit different because we're so early.
You almost need the other funds to come in to support the rest.
Yeah, and we don't necessarily have to be, we have to be collaborative in that sense, but it's like, it's more, it's not having mutual because we're getting the deals before they come, before they become companies essentially, as early as possible, that we can bring everyone into the ecosystem. It's not necessarily alliances that we need to form, if that makes sense.
When you look at a lot of the startups, at least the ones I speak to, particularly the young ones, when they talk about raising capital, they always talk about, I don't want money, I want smart money. To what extent do you think that these investors are smart money? What distinguishes smart money from non-smart money? And maybe if I may add to that a bit of a tangent, which is, when I think of someone being in my business, they can be a partner, which means if Amir and I are together as partners, we're every day rolling up our sleeves and working on it together. They can be an investor, which for the most part to me means they put money in and they want me
do
to
all the work.
operate the business, and they're available when I need them, but otherwise don't interfere too much. And then there's what I consider the owner, where the moment they come in, I'm essentially the employee as the entrepreneur founder. And maybe you can also help me relate to what extent, is it, are investors smart money or trying to be smart money in this space as venture capitalists? And then what roles are they trying to take, and what role are you trying to take? Are you trying to be the partner? Are you trying to be the investor, or are you trying to be the owner?
It's a great question. I think it's a great question because I think even 20 years doing this, I still am iterating on that on the strategy there. So, venture, they say you could be great at sourcing, you could be great at selecting, and then you could be great at supporting. Most founders you ask, especially the outliers, they don't need help. This is factual. Like they just don't.
In fact, they probably don't want help unless they're drawing down on it. So in other words, they want help. They want to be able to call you rather than the help.
Yeah, exactly. And even then, if I look at like the ones, it's like very few, or at least I don't want to generalize, but it's hard to be so. If we take the view that they don't need much help, then what is it that you can bring to these guys? And I think for me, at least what we've, everyone has a different strategy. I can't really comment on others. I think that the sort of the value out of an investor is blown out of proportion a little bit, right? People try and position themselves a certain way, but then when you actually engage with them in the cap table, it's not true, right?
Yeah.
But that's too late now. They've engaged, they're married with you, and that's it. So I think what we try and do is, I think, one of the things we've landed on from the day zero is this idea of like, which Brian Chesky did a podcast recently worth listening to, because he talks about what investors bring to him and what value he brings. And he said belief. So like when you're at the earliest stages and someone gives you belief, that in itself is such a boost of self-esteem, security, like, confidence. And I think that can have massive impact in your own, like, a way of like attacking the problem or building the company. And so what we try and do is we actually don't want to call ourselves an investor. The term, I think, has been, unfortunately, has been filled with false promises, right? And I think today, venture capital, even as a name, is just, I think it just has a ton of like ego, insecurities, and many things around it that I don't particularly like. And so the way we say, we try and, we try our best to think of ourselves as the pre-venture investor, like if you want to call us an investor, but it's more like we're an extension of the founder's brain and resource. Like you said, if they need us, they come to us. But generally, at the beginning, they do need somebody because they're alone. Not necessarily to help like execute on things, but to talk through some other challenges, especially if they're first-time founders, which is the majority of the ecosystem. They haven't done fundraising before. They haven't done go-to-market before. They have a sort of a hiring network, but they still want to get good people into the team, and they need to vet those people, which they're learning how to do, right? So that's where that's our strongest position. It's like we can really like spend time thinking about hiring, go-to-market, and fundraising with you in the beginning so that you make the best decisions, because those are critical compounding decisions. And then when you get to Series A and things are a bit more clear, you've built more confidence, you have a great team around you, unit economics are showing up, traction is growing. I think we have a less of a role except to be that sort of partner. But what happens there is that because you built so much trust at day zero, the relationship you have with the founder is totally different to any other investor in the cap table. I think that's the magic that we want to have with all our sort of founder partners.
And that type of work where you do support them, whether it's hiring or operations or growth, how structured is that for you with them, or is that on a case-by-case basis? Is it
Great question. We call it, we have this term, we say every year there's about 2 to 3 key moments that we have to be there for you. We're not there every day checking, like, no, we're obviously on WhatsApp. There's very much a in and out kind of engagement whenever you need something, but there's a key moment that arises. Every couple of years, 12 to 18 months, you're raising around. That moment, we have to be there for you. if you need to hire 1 or 2 senior people, we're going to do our best to bring candidates, to even interview them on your behalf. Like, we come in for that key moment. It's not for all hiring decisions. It's like for a key personnel. Go to market happens once a product is there, and that's an iterative process. That could be a 1 month, and that could be a few months engagement. And it's not me that does it. I have my partner Saeed Raju, who was been doing this for 15 years. He led international growth at Uniphonic. Before that, he was at a few US tech startups that were launching in the region. So he's done that motion of go-to-market, building out systems, sales motions, knowing what good talent looks like. So he plugs into that founder and gives them that knowledge and the resource, the thinking to help solve that problem. So we're trying to, that's why I say it's iterative, because we're trying our best to really like hone in on those, let's say, key moment issues. And if we get it right, it can have a compounding thing. And it could be just one thing, like, and it's all, sorry, I'm getting a tangent.
This is
It's all like a network effect thing. Like, we invested in Husby. Husby was working with me at Beko. Jad left to start a company. And, we were the first check before I even started the fund. But he ended up just, executing his plans. Then got Founders Fund to come in. Their first investment in the region was with him with a small check, but they had a relationship now. And then we have another company in our portfolio founded by a 19-year-old Saudi. Now he's 22, but he's from But when we invested in, he was 19. And, he was raising his Series A, and Founders Fund reached out to Jad and said, who can we speak to know what's happening in the ecosystem? And they passed that conversation to me. So I got a relationship with Founders Fund, and I said, listen, and they asked me about who they should meet. And I said, you have to meet this company. This guy is just, he's a different type of founder that we've ever come across. And they like young founders. If you know Founders Fund, Peter Thiel has Thiel Fellowship.
Pays people to get out of university.
Yeah, exactly. So they met, and then they ended up leading the Series A. So it's like we have to sort of find these connections through opportunistic moments as well. It's not like we come in with a certain plan. And then that from there, the company's gone on to, continue to great strides and milestones and yeah, I mean, so I'll pause there, but I mean,
what did you see in the 19-year-old? I mean, that's a difficult call. I know you spend a lot of time thinking about the founders.
Yeah,
probably more time than thinking about the business itself. But I'd love to hear a bit about
it's
that story or any other. I mean, since you are the champion of the underdog, a 19-year-old getting funded and released is definitely on the face of it, at least, an underdog story. But I'd love to hear of that story and any other one that you felt, listen, we did a decision that within the context of the region is atypical, and that's how this decision went for us and why we made it.
Yeah. Look, I think there's a couple of things. Maybe I'll go back to that first. I'll come back to this, but one thing that we do and we hold ourselves accountable to is this sort of high urgency. Most founders have a need for fast decisions. So our process to make an investment decision is extremely fast. And because we're so early, we don't have to do much diligence, because there's not much diligence except for the founder. Just saying that because I think when we interact with, let's say, Jad or Abdul Majid, the founder of Menzil, it's in the first call that you have pretty much 80% of your decision figured out. And what we underwrite there, or we try and find, is two things. We obviously a lot of what I've learned in my history of doing this is, if it's really about the journey of the founder, because if the founder is able to grow as a human and a leader as fast as the company grows, they're going to build something magical. And some people have the capacity to do that at scale, especially second-time founders like Hassam, for example. And some first-time founders don't know, and so you have to figure out, can they grow into that person? And so with Majid, you just, from the get-go, you see a high intensity, obsessed, thoughtful, wise. Just, he had all these character traits, and it comes from just the way we start our conversations typically is to understand their history. Like a lot of our conviction.
How did he arrive at your doorstep, or how did you arrive at his doorstep?
So we had a great analyst called Nadine. She's based in Saudi. She would source, refer high quality talent through our networks. They would refer us to people that we should speak to who could start a company or are starting a company. And she would have that conversation initially to just understand who they are, what their plans are, not necessarily the agenda of investing, but just to get to know them. she likes someone, she passes it on to me or Said or anyone on the team, and to have that second call. And so when she met Majid, it was quite clear she said there's something here that and she's young, so she's maybe like learning the ropes, but she gets an idea of like the quality of the human. Um, and so passed on that call. The next day I spoke to him on Friday, which is the day he was ready to make the call. So another indicator of like someone who's just ready to go. And then
Go getter.
go get it. And we had a call and you know, I mean, it's hard because it's like, now I'm looking in hindsight, but like it was like immediate when I say that as I got to know him and his history and his character, which comes from like his childhood. Like you typically form your character from the age of 3 to maybe 21. And he's 19, so he hasn't even hit 91. So I'm seeing him firsthand, like what he's gone through in life and how he takes decisions. And for me, it was just, I've never experienced that type of character in my career. Like really, like 19 at that stage. So I was just like completely taken aback by him, but also wanting to be on his journey. And it was immediate. Like,
And didn't attend university.
dropped out.
Dropped out. And what's the business? Are you
It's a workforce housing company for staff accommodation in Saudi and the wider GCC, but mainly Saudi right now. But it's like that's the starting point of a much bigger vision. He's using workforce housing to provide really good quality accommodation, give these workers dignity in a market that's kind of fragmented with low service quality. And then when you get the worker in the ecosystem, they can be given other kind of benefits like financial services, healthcare, and food and other things. So it's an untapped market that needs, it's operational and it needs, a lot of effort. It's high intensity. So
as a business leader, I know that your company's success depends entirely on the people you hire. At Bayt.com, we've helped thousands of organizations across the region hire talent faster and more effectively for over 25 years. If you're new to Bayt.com, you can get 15% off Bayt.com's hiring solutions using the promo code BaytCast15. Click in the link in the description, submit your details, and our team will reach out to help you scale your business. It felt to me that in round one of tech evolution in this part of the world, a lot of it was geographic arbitrage. It was looking at what's going on elsewhere and saying, listen, it's going to take the global players a decade or two to bring it here.
Mm-hmm.
Why don't I set it up? And then there'll probably be potential acquirers. And I think the Kareem story, the Maktoub story, the Bayt story, many others are sort of geographic arbitrage plays. What you're mentioning here is not a geographic arbitrage play. It doesn't sound like. It sounds like, okay, listen, there's a particular problem in Saudi that is across the region, actually, which is we have a lot of laborers. A lot of them don't live in in ideal potentially conditions, and it's a huge market with a lot of room for improvement. Are geographic arbitrage opportunities dying in the region, or do you still see that the vast majority of what's knocking on your door is because I think Tabi, for example, is a geographic arbitrage
100%.
play. I'm not sure if Huspi is or isn't. I don't know to what extent. I don't know enough about that industry.
Huspi is innovating globally, but there's two questions there. So I think Hussam is a mix because credit card penetration didn't exist in Saudi, but in other markets it was high penetration. So he kind of, while he took
There's a localization,
but the opportunity is much bigger, and that's why his vision is becoming much broader than just BNPL, which is exciting to see. I think Huspi was initially like an arbitrage play, and then as they scaled, they noticed an opportunity that could scale beyond the region. So, which is the real estate super app that they've built on the back of mortgages, and that's what's taking them to Europe. And they're going to scale beyond the region. Obviously, they're in UAE and also Saudi here. But it's other thing that I notice in these situations is the founder kind of. That's why I say it's about the growth of the founder and their ability to sort of expand their vision and make better decisions on people, on product, on markets. And Jad was single-handedly did that. Like as he unlocked opportunities, he started seeing bigger things to go after and products to build. And so his real estate super app, I think, is like the leader globally. Although US, I don't think There's Open Door and a few others, but I don't think they had the same model. So yeah, I think there is. What's happening is more and more. I'm not saying it happens all the time. People are approaching opportunities with a much more global appeal, global lens. But I think it's a mix. For the, let's say, majority, it is still geographic arbitrage.
Yeah.
Although I think AI is going to have an impact there. But more and more, there's like, global ambitions coming from here. And not all of it works. Like we have a Saudi company that tried to go and expand to London, and they knew very quickly that we're a Saudi play right now. Maybe later, let's figure out what we need to go there. And it doesn't work, right?
Yeah.
But then we have Sapi, which is a really exciting F&B company that started out UAE Saudi, but then started getting customers from everywhere. They're in 48 countries with customers. They launched offices now in London and Australia. So they're like, okay, we can go global with this product. And they didn't think that way 3 years ago, right? So more and more those things are opening up, which I think is going to be exciting for the founders building things here,
So I've also heard from multiple sort of MBA professors that if you take a bet on an entrepreneur versus a market, the market always wins. Because if you put the best entrepreneur, for example, in a very challenging market, let's say you send the founder of any of these great companies you spoke to and said start up in Afghanistan, it would be very different than starting up in Dubai. When I was starting, it felt like the story was the world was globalizing in general. Boundaries were coming down. And most people, when they were doing their startups, were talking about at least regional expansion, because that seemed to be the opportunity. That the Arab world in North Africa is 300 million people. It's a massive market. Boundaries are coming down. Let's tackle that. It feels globally now the reverse is happening. There's a huge anti-globalization drive going on. Countries are putting up more and more protective boundaries, whether they're in our region or across the world.
100%.
How does that affect how you look at investments and the market sizing, right? So,
yeah, it's a good one. I think I don't have let's say the work in progress answer is Saudi is, so yes, that's happening. And I think Saudi is building for Saudi, and on its own, if you pick the right sort of opportunity or market within that geography, you could build a really big company.
And are you trying to check the box on, so what does the big company mean? Because you talked about $1 billion. And there's obviously, you mentioned also early on, we were talking about the $20 million. So if someone comes up with when you market size and you say, listen, I'm going to market size this just for Saudi, what are you happy backing in terms of a market op?
Because we're early in our fund size allows us to obviously not $1 billion revenue is like a huge
a dream come true, but not necessarily the aspiration.
I think 100 million is realistically, the baseline of what would be really good for companies to go after, and you have a bunch of sectors that can enable that. But obviously, like we don't so we have our thesis is purely on talent. We do obviously look at markets as they show up. Like we didn't have a thesis on workforce housing until we met Majid, right? So that's I think the most exciting part of it. So, so maybe going back, it's like. So Saudi, can you build $100 million revenue company in Saudi? That's exciting for us. I think Dubai, great test market. Husby showed, so is Sapi and a few others, that you can test the market here. There's a diverse population, good business community that you can actually get engagement traction. And if you get it right, you can export that. Typically, you can export that maybe regionally, even though I think the Dubai-Saudi expansion isn't as easy as people think. But also Southeast Asia, you can go to parts of Europe now, and you can compete. And so I feel like that's going to be more common.
And you see, Husby is an example. Are there others who've sort of gone the European way or otherwise that have shown some success?
Not yet. Sapi is one, but they're still early. But I think they've.
You did one at Beko, which was a
Fresha,
yeah.
Fresha moved headquarters to London from Dubai. I think at the time there was just not enough talent to really acquire. This is like 2015, right? So that company is really successful. They just raised from KKR at $1 billion valuation a few months back. but global company, right? And that was the first of its kind, I think, at that kind of scale.
Yeah.
Um, yeah, so I mean, but I feel like this sort of compounds again, like it's happening more and more that you'll see it just continue to happen over time.
Given the stage that you're getting into, you said it's a lot of it is about the startup
Yeah,
founder
yeah.
and just understanding their story. And then you start getting into the market and other things. To what extent is that gut versus hard research? And if you allow me to just
Yeah.
explain what I mean by that contrast. So, for example, we had at some point a very large PE firm looking at investing in one of our businesses. And I remember they bought an army of consultants, different firms, everything from a consultant to look at our CRM system, another group of consultants to look at how our sales teams work. They bought in third parties to do reference checks on all of us to make sure. It was a big check, but it was a very detailed, drawn out process where it felt like they didn't want to leave anything to chance, that it was a very rigorous process.
Yeah.
I guess at the size of investment you're doing, that doesn't make any sense. But when someone does come to you and says workforce management or whatever it is, do you actually bring out the spreadsheets and start calling people and you do some sort of dedicated research on that market, or do you accept that, listen, this is a great entrepreneur and and I trust his ability to find his way through this?
So the honest answer is well, it is all about trust.
Yeah.
I think people enter into those engagements with sort of that's kind of the due diligence of some PE firms is a trust building thing for them. I think for me, it's the safe and sort of the depth of the conversation I can have with the founder. Obviously, we do, like, there's Said and Ahmed on my team, my partners. Said is very much excited about markets because he does go to market. He has a sense of customers and that feedback, so he can gauge that quite quickly. And Ahmed's great at going deep on the product and the complexity of it. So I think there's certain checks that happen there, but it's not due diligence. It's like, a couple of questions. The idea is, like, imagine you're a founder trying to build a company and you're trying to really, like, scale quickly. Like, we want to be at that same pace. We don't want to sit there and drag you down and say, here, the long list of DDQs, 27 questions, which 100% of the time, by the way, will be irrelevant in 3 months.
Sure.
Everything I'm answering right now is useless in 3 months in the startup world, right? In
Yeah.
the pre-seed stage. So why should we put the founder through that pain? Like, we're in it with you. So we want to build trust. We want to be at the same pace as you, make fast decisions with you. So our commitments come in really quickly, right? We don't, and with AI, thankfully, we can do research. Like, we're building tools internally where we can, like, as soon as we like a founder, we can churn out a research report in a matter of like 30 minutes and then have depth in that market. And that just gives us a good sense, right? And sometimes it pulls up, orange flags that we have to get clarity around. And sometimes, and most of the time, it's good enough that gives us confidence to make a decision. So, but ultimately, it's number two. While I was on my own starting, it used to be just me making a call. Now I'm trying to build sort of more knowledge and depth around certain areas. References are important for me only on the integrity question, because, like, it's like you can't anchor your decision on someone's thought of the person unless it's like he's did something unethical.
Sure.
That's probably the only thing I want to read on that conversation. You telling me he's going to be a good founder, I'm not going to anchor my decision on your opinion if you haven't done this investing before. So it's sort of like I've learned that it's really about integrity.
If I wanted to approach you for capital and to maximize my chances of one, you having a conversation with me, and two, actually getting funding from you, what would I need to do as a founder? So, and I say that, I mean, I interview people all the time for jobs, and sometimes there's, particularly in our part of the world, unfortunately, there are a whole bunch of basics that are very often not present in an interview. So people still, large numbers come late to interviews. They come poorly dressed. They don't have a notebook in hand. They don't have questions prepared, which to me seems crazy. But I imagine there are parallels in the VC world where people expect to get funded from you, but they're doing
Yeah.
all the wrong things. So I'd love a bit of an explanation of what the wrong things are and what do the
Yeah.
right things look like.
I mean, it's hard to. So outliers are there because they're different, right? So there's no like uniform. At least, okay. So getting in touch with us is simply finding a trusted network source in our network. So it could be a founder we've backed, it could be someone that who previously worked with us, or someone in our community. If they can find a way in that way, that's always like going to be responded to quickly, because we nurture that ecosystem. That's really where our strength lies. On the what gives a good chance. I mean, it's a hard one, but it's like we use these terms like depth and clarity. Depth shows up when if we ask you why questions in the process of learning about your business, are you able to take us down the rabbit hole with you and clearly articulate yourself, which means you've done that so many times that it comes naturally. Those are signals that we try and find in the conversation. Sometimes today you have AI slop coming in a Claude built deck that sends to us, right? Okay, that tells me that you didn't write that deck. So I know that if I'm most of the time I have that conversation with you, it's going to be shallow. So I think there is sort of really like insight that comes from that process that founders would go through, that we try and uncover in the first conversation. And then we look at progress. So we may have one call, either myself or someone in my team, and then when the next person has a call, it could be a matter of a couple of days, something has unlocked in the founder side. Like they learned something new, they advanced somewhere, and that's just an indicator of like the pace that they're going at, right? If they're just waiting to get funded and they're not doing anything, that's just like a kind of a red flag. It's like, oh no, I'm writing a product. No, but you also have to build your business. That's the hard part. And the best ones can do both sort of really, really well. But those are like signals. It's very hard. That's why I don't come with general rules. Like I said, Nadine found Najid. Danny from Sapi was someone I knew in his prior life at QuickUp. So it tends to happen that way. And also just generally, the best talent or generally know really good talent. So that kind of network effect exists in those talent networks.
When we were talking about some of the success stories, so there were great stories, companies that had gone international, companies that were approaching very large revenues, companies that were getting tremendous valuations. I've been questioning for a really long time the type of habits that VCs might be encouraging inadvertently. And one of those habits is obviously, which those of us who have a bit more gray hair are always concerned about, is when I grew up, the single most important thing you did with your business was get it to profitability. And it feels like, the path to profit is increasingly become a less important thing. It's become diminished. How profitable you are has become diminished as a measure of your success. Which ultimately I ask the question, does that help businesses sustain themselves? And I've seen a lot of the acquisitions that have happened in the region, businesses have been sold for large amounts of money, and then within 12 months, they've been shut down entirely because they're unable to maintain profitability. Tell me a bit about how you think about profitability, or is it even a part of the conversation? And maybe, again, you're too early in the process where it doesn't matter. You care much more about sizing, but...
Great question. So I think it's a great question, man. I had written, there's so many ways to answer this, but I think ultimately, I think it's, so in the beginning, we're backing the founder, and then we follow on, right? We do have...
You do follow on.
Yeah, we always follow on in companies that are demonstrating the right sort of
metrics,
progress and metrics, and the founders growing and making good decisions, right? But there's pivoting, right, that happens. So you don't really figure out the business model at day zero. Sometimes you do, like in Husby's case, it was very clear. Or in Majid's case, the same. The model is working. You get the idea of the unit economics from day zero. And so one of the things we are, really focused on is margins, gross margins. So the way I think about it is, it all depends on the market you're going after. So if you take real estate, it's a multi-billion-dollar market.
Yeah.
And in the venture world, it's like, if you're able to exhibit good margins, gross margins at a base level, and you're able to control your cost of acquisition. So in Husby's case, they actually have a revenue share. It's the mortgage brokers that they empower who get them leads, and they get them leads for a fixed commission rate. So their growth is pretty much controlled, and their margins are healthy. That can scale to the size of the market. So if the market is $1 billion, you're going to run to capture that whole market as long as you maintain those margins.
Sure.
The problem that most VCs do is they focus on growth top line, and they break that model. They'll give you money, you spend on marketing, you show growth top line, you keep doing that, and then when you stop, when the money turns off, you're screwed because your model doesn't work.
Yeah.
That's the challenge that a lot of VCs put founders under pressure into. So it's all about the fundamentals on a gross margin basis, because if you have, which is north of let's say 40% as a metric, as a baseline, if you have those economics and you're not tying your marketing spend attached to your growth, like in Husby's case or even in Majid's case, then you have a really exciting business. And now it's just, I need to raise money to get as much of this market as I can in a fast way, because I know the model is working and I have demonstrated that I can execute, right? And I think that's the sort of the thin line between like what typically venture guys do, and they put pressure there, and then you find out, like, I love Kareem and Mudassir Magnus are my close friends, and they're phenomenal founders, but their margin, their economics was hard.
Yeah, I mean, in a few of the large exits, it felt like if the company hadn't exited, it was going to die, right? And we're lucky that in several cases, these businesses did get sold or financed because the economics were so challenging.
Yeah, but on the flip side, if you take, I wrote a post about like this business is all about the last mile. This is a very different answer to your question. If you take Property Finder, it was profitable from day zero. And his economics, as you know, with classifieds, it's like super high margin. And he only needed to raise a few rounds of funding and still be profitable on the way. And now he's like, at least before the sort of conflict, he was like net margins are like significant, massive. And so he can scale, he can grow, he can make acquisitions, he can do a lot of things with that kind of business.
Yeah.
But yeah, I mean, it also depends on the environment. Like you look at AI today, it reminds me of the time of like the ZERP environment where Kareem and Uber blew up. The same thing, access to capital is so cheap, companies' valuations are through the, at least globally. I mean, here, this sort of sector is still emerging, so you're not seeing that many, insane valuations.
So I'd like to dive into that a bit, which is at any moment in time, there's headwinds and tailwinds facing entrepreneurs. So when we were starting off, a lot of the headwinds were massively fragmented markets, regulations that didn't allow us to set up or to scale. There wasn't enough internet penetration. So there were a lot of reasons why we would fail, but the tailwinds were, they were still totally non-competitive markets. We knew we had a young population that was large, that was growing. So they were for people who wanted to start up at that stage, it was an opportune time and costs were very low.
Yeah.
When you think about today's world, and obviously today is very different than the conditions are very different than even 3 months ago, given the region that we live in and the crazy times we've been through. But if you were to characterize for someone thinking about starting a business right now, or who is at pre-seed stage and just beginning to scale, how would you characterize the market in terms of what are the things that are going for people thinking about it, and what are the things that they should worry about? Candidly, I feel there's a lot more headwinds than there are tailwinds. So I'm far more conservative personally as an investor than I've been in a long, long time because of a lot of the macro things that are going on. But again, you're always better off being optimistic.
As a VC, we have to be optimistic, but not that we're doing it for the sake of being optimistic. But look, founders, or at least people who are trying to build in this environment, are optimists. I think, okay, let's say it varies by market. If we just take UAE and Saudi alone, like in Saudi, for me, it's just, there's so many white spaces that are not being built right now that are significant, that if a founder was empowered, given funding, had the right resource mindset, skills and team around them, they could really build something massive.
And it's becoming a lot more friendly to do business in Saudi. I think it's a lot more startup friendly than it was 5 years ago or 10 years ago.
But you need to be Saudi.
Yeah.
You need to know that local market. You're not going to come in as an expat and do it. It just doesn't, it hasn't happened before, right?
Sure.
So I think that's what's going for them. It's like there's a ton of opportunity there if you're ambitious enough and you really want and aggressive enough to go after it. Um, and then second, with UAE, it's it's become a hotbed of talent, like globally. Like people are wanting to move here, even with the issues in the past 3 months. Like people are coming still; they want to be moving to Dubai, right? High quality talent from massive success stories, whether it's Revolut, Deal, and other massive tech companies globally that want to, because of obviously today you tax free, and they handle the situation really well. But I mean, generally that influx of talent is only going to create momentum for that ecosystem, right? So those are two forces that I think are interesting. I think Dubai problems that export, I think, is really where the opportunity is. Can you build bridges to other markets fast enough? If people can do that, then that's great. And then obviously with AI today, I mean, I'm quite bullish on this, this sort of the agency model, like take services and then uh, build your own AI native tooling that allows you to service your customers really more efficiently, but still charge them what you typically charge. That window is going to exist for some time. And those are massive potential opportunities that could be capitalized on by founders today. But I mean, again, like I said, our thesis is talent. So both forces, you have Saudi local talent and you have influx of international talent that we want to underwrite. And market size is a challenge in UAE. Those are going to exist, and they have been for a while. But you still built, success stories through that. That's how we're thinking about it.
Again, you're called Cotu, the champion of the underdog. Every entrepreneur, startup founder that I've spoken to, when they describe the worst part of the process for them, it's always the fundraising process. It's a time when they're particularly vulnerable. It involves knock on bottom doors, feels oftentimes like you're selling your soul. And, you obviously get the door slammed in your face many times. And more than that, you get no responses also way too often. When you think about what can be done to make that process better, particularly in an industry where you have to say no 99 times out of 100, what can be done and what are you guys doing differently? Where if I were to come to you as an underdog, how would my experience be compared to knocking on any other door?
Yeah. I can't comment on other doors, but for us, I think what I've learned is that this power dynamic that exists, it needs to go from the day zero. You cannot come with any ego. The more authentic and real conversation you have, the better it is for both investor or at least investor founder. If you want to, even the labeling, I hate that. But let's just say that's the case. No, because I think it's all about just two people building trust. And the only way you build trust is by being open, honest, and direct. Like even us saying no, we're going to be as direct as possible, even on the call. Like I'm not going to have to wait for you to email me back. Like I will tell you my reasons on the call. If you come back and you make progress, we'll have another one. But we try and be as candid in these conversations. And that's out of respect because you have 10 other conversations you want to have. And when it's a yes, we try and be as urgent as possible because we know that you just want to continue building the company. I think most I don't want to comment on the ecosystem, but in general, most people exploit that power dynamic a little bit. They don't give enough respect in the process. And the way to change that for us, at least, is by being the first check. Because once we're in and we lead, people will come running. You just need that first check. Then people will be like, okay, someone's investing. Because FOMO is there. And this exists because it's an industry that's quite insecure. This is my, not to butcher the industry, but it's just in my history. Like as soon as they get that lead check, everyone wants to be part of it. Okay. By us being first, what we try and do is we try and navigate those discussions. So we create the culture you want in the cap table. Nobody's going to come and put you in corners. No one's going to come and misbehave. They're going to treat you with respect because we're in that with you. And the next round too, we're going to make sure we follow on if you need more time. We're not going to leave you hanging or slow your, and that's something we hold ourselves to account. I'm not saying we're perfect, but that's a standard we want to set. And I think if we set that standard, people will follow because, these guys are doing well and they're doing it this way. Okay, we have to change the way we do things. That's the goal. I don't know if it's happening, but it's the goal. And And the third thing is, I think as an ecosystem, people have tried to launch this. It hasn't really succeeded, but anonymous feedback. People need to say, this is like, founders need to say, this is how my investor was, without naming the founder, putting him under pressure, but calling out the investor. Because it's, I've seen endless situations where founders have been screwed, or, false promises, again, ghosting. These are, the worst is pulled shareholders agreements. I've seen people who sign shareholders agreements and not funded, right? So it's just like, it's just the sort of etiquette is still a long way to go. But now, Majid is a great example, because people said no to him because he's 19. And then we weren't the first one to speak to him, but we were the first one to commit. And now he's got everyone wanting to commit in this company, right? So and now he commands respect, right? So it's exciting to see that transition. It doesn't happen, of course, with everyone in our portfolio, but I mean, those are the moments where that will impact the way VCs and fundraising will be for a lot of the future founders,
You talked about how the importance of being authentic and real, and that's in my experience with you, that's something that's always characterized you, for me at least. And what I've seen you talk about pretty publicly is about your journey of self-discovery and your journey of authenticity and trying to learn more about who you are. I'd like to learn a bit more about the journey, but I'd first like to start off by, was there a particular thing that broke or happened that started you on that seeking journey? Was that always you, or was there a point in your life where you felt this is an inflection point and I want to go out and figure out where I am and where I'm going?
Yeah, I was in the program, if they call it. I don't know what that means, but like I was like, VCs have to behave this way. I have to behave this way,
And what was that way? Was that aggressive, or was that
power dynamic, hard term sheets, earn-out structures, clawback structure, things that are not trusting mechanisms, right? Or ghosting, just not really, just like it's not ghosting was not a skill. It's just like power, just like this sort of dynamic that is scripted in books about how VCs should do. That's how I started. Like I was like, oh, I have to behave this way, this, because I felt like, but it would always. So as I was behaving as I was following the rules, I just felt like this was just not aligned with who I am. But I didn't know that until, let's say from starting Beko till about 2018-ish, is like maybe 6-7 years. Because you also know if you're good or not many years later. So after 6-7 years, I'm like, okay, there's something I'm not happy. Even though we're quite successful as a firm, I'm not happy. Let me figure out what's happening here. I got a coach, had many sessions with the coach to try and understand.
And the coach, again, that world is massive. Life coaches, business coaches, I've lost the count of nomenclatures. So it's like going to a doctor, but not knowing 100%. If you need an orthopedic surgeon or a podiatrist. I feel like, so how do you know which coach you go to?
So I actually, no, I'll tell you what happened. So I was like, I met a friend who I hadn't seen for like 20 years. And she's like, have you tried meditation? I'm like, no, meditation, how do you, I thought I know what meditation was. And so I'd be like, okay, no, I haven't really tried it. Why? She goes, it really changed my life. There's this 2-week meditation course that you should check out. She sent it to me. I'm like, okay, that sounds interesting. Let me go and do it. And the person who was teaching the course is she's a coach, but she's like not necessarily a therapist, because she's not qualified, but she's a coach and a therapist, I guess. So you can combine the two, who teaches meditation. And I was like, and so I learned how to meditate with her. And I was like, okay, I really enjoyed that process. And meditation now became something that that I found so much value in for myself, in understanding who I am, like my values and stuff like that. And she started guiding me to books to read, and then we had sessions together. And then over time, I started realizing the values I stood for. And obviously values, they evolve as you have more life experiences and stuff. And at the time, thoughtfulness and authenticity were the values that I held dear, which is why it was so at odds with following the rules of like venture. Not that it's not thoughtful, it's just not me living an authentic way. And then I started writing my thoughts down over a couple of years, maybe another year. I did this, and then I decided to leave. I was like, you know what, it's possibly time for me to move on. And I had wrote a manifesto she actually told me that I like to be the champion of underdogs. So I was like, oh, that sounds like something that means something to me. So that's what was the birth of Cotu, essentially. And then that, me and obviously Danny had very difficult conversation in the process, because we had built that for 9 years. Like, it was it was what I thought would be my 30-year life, whatever, not 30 years, like my long-term world. And then I left, and I was like, oh my God, that's when it really hit me. That was probably the hardest moment, because I was like, okay, now I left, like, who am I? Even though I went through this exercise, now I have to find myself again. And that was a whole process. I did this 10-day Vipassana,
which is silence.
total silence for 10 days in a farm in Ras Al Khaimah. They do it in like 50 countries around the world. It's a practice that's been existing for like.
And I've heard
50
from some
years.
friends, by day 3, you sort of collapse and cry and uncontrollably. And I guess it might be different for everyone.
Yeah, different for everyone. But for me, it was day 4, day 5. I wanted to leave. I was just done with couldn't handle it's like it's quite a tough experience. It sounds easy when you think, but it's extremely difficult. Like, you're left with your thoughts, and then it's sort of a reel of thoughts that just keep coming to you. You can't control your mind, but then the mind just gives up by day 5, and you find silence and peace. And it was really transformative, because it's like the way just on a surface level, it's like detoxing your mind, essentially. Came out of that, and then that made me really want to go after building out this firm. And I'm learning as I go. I mean, I started myself. Then I had this amazing guy called Gavin Walsh join me out of the blue, opportunistically met him, and then he became my sort of right hand. And then, we grew the team. Now we're 7 people. We raised our first fund. If it wasn't for a guy called Karim Radwan, who's now at Lunate, he anchored me in the fund one, and like I do with founders, right? He was the guy who gave me the first check and committed. Then everyone started coming, right? So I had my share of luck in the process. But I mean, now it's like something so sacred to me. This idea of like, hey man, forget like, let's just be real. Like, this is how I want to interact with you. I want you. If you see me as a VC, I've already lost in this process, because I don't want to be that guy that's going to put you in any. Like, I'm on your side, right? So let's start there, and let's have an open conversation, mutual open. Like, you want to know about me, I'll anyway. So I realize we're running out of time, but yeah.
I want to ask one last question. So you went through a process.
Yeah.
It feels like you had a bit of an awakening,
Mm-hmm.
hard, and it made you change a lot in your life. Are you keeping that spirit alive, and are you keeping the practices alive? Or because life has its demands, and you're in this industry that's still a tough, financial, competitive industry, and it's a school of hard knocks in many ways.
Absolutely.
Can you keep the softer, gentler, kinder you in there? Can you keep the meditation in place?
So meditation comes and goes for me. Like, it comes to me in hard moments. So I use it as a when I know that I'm struggling to balance everything. It's definitely there for me. I realize that I'm an emotional person. So even my authentic self is emotional. Like, even founders see all sides of me. There's not just some, Buddha that's in front of them that can, I definitely have my moments. But I think they appreciate that too, because it's authentic. They see the realness of it. And this other side, I think for me, also having I got married in the process, and now a baby, those are moments that really like ground me, but also having someone to hold me accountable also, and then responsibility with my son gives me a bit of perspective that I didn't have. So that's why life brings more moments that take you into like reflecting and values and stuff. I think for me, it's still if I had to, like, the industry is still a struggle, because fundraising, we're on Fund 2 now. Fundraising is always going to be a challenge. The LPs still operate with the rules, right? They see, they want to see, absolutely, rightfully so, like DPI and all these things, but they kind of measure success by, like,
retrospective.
Yeah, they don't think ahead, and they're not generalizing, but a few of them are courageous enough to just,
take a new bet.
So I think that has its challenges for me that I'm still developing, learning how to handle. But I think what I've appreciated the most is I have a team around me that are just like, they are extremely supportive and like allow me to be me,
Amazing.
Yeah.
Amir, I could go on for hours and hours.
This has been great.
I
Honestly,
really appreciate you being here. I appreciate the thoughtfulness. I appreciate the honesty. Inshallah, I continue to see amazing success coming out of you and the region, and And for me, at least, I've walked away with a lot more optimism about what can be done.
Yeah.
Thank you for bringing
Thank
that.
you for having me, man. I really appreciate it.
شكرا. يسلم. ممنونك.
Yeah. Thank you so much.
Thanks so much for listening today. If you liked what you heard, hit that subscribe button before you go. And I'll see you in the next episode.